Very good evening, friends. I'm Nalini Swamy, welcoming to my channel Smart Index Edge. Today's topic is who moves the market. Many of us, we do not know the basic thing who is moving the market. And we should know there are two types of people, market makers and also institutional algos trade in the market. These are the two people. We do not know who is market maker, what is institutional algos, we do not know. How do they operate, we do not know. Once we know that, come to know how do these market makers and institutional algos function, and the convergence of these two people will lead to a very good momentum trade on the any underlying indices or stocks or anything. Let us understand this. See, two forces are there in the market. One is market makers. The other one is institutional algos. They watch different levels, but at one point of time, they arrive at the exact same price. That is the price actually. Who are these market makers? Market makers are banks, brokers. Suppose if you are trading on the Zerodha platform or any fires or then these are all the market makers. And they provide liquidity. They are providing designated liquidity providers. Always, what these people will do, they quote both buy and sell simultaneously. Yes, friends, they quote buy and sell simultaneously. How do they get benefit? They get benefit from the bid and ask spread. You might have seen in some stocks, there will be spread between the bid and ask will be too wide. There will not be liquidity. And manipulations will be very much. Even on the indices, if you carefully observe the bid and ask, there will be a spread. 50 paisa spread or 1 rupee spread will be there. If that is there, they are going to get profit from that spread. They are not bothered about the direction. They will watch Camarilla S3 S4 as their outer boundary. I'll tell you why Camarilla pivots are used for them. That is a different calculation from the standard pivots. Standard pivot calculation is high, low, close divided by 3. But this calculation is range from where the price has closed. From there, R3 and R4 are calculated. From the close, beneath that, S3 and S4 are calculated. That is the range calculation from the close. That is the different calculation they use. Why do they use? Because market moves in ranges. For an intraday, they will see for that. So market makers are those people, they get benefit from these spreads. Because many multi crores of they trade will be traded and they will get with for 50 paisa itself they will get lot of profit. But whereas institutional algos, who are they? They are mutual funds, foreign investors, hedge funds, quant proprietary desks have a directional market view and mandate. So, what they do, they will get profit from alpha being right about the direction. Then they will wait for the discount. They will also watch rolling pivot S1 as their fair value level. Anybody, even whoever it is, they want fair value. These institutions, they want fair value because imagine a shopkeeper, a small shopkeeper, he is selling the apples or something, he will care for only the margin. He is not bothered what will happen to the next day or the day after next day. Whatever it is, little margin is enough for him. So these market makers are like that. Little margin, they benefit. They are not bothered about the directional thing. But whereas institutional algos are bulk, they buy in bulk. When they buy in bulk, actually they want directional bias. If they sell in bulk, they want a directional bias. So the amount, the quantity, what it is bought by institutional algos will be very huge. Okay? See, market makers make money from the spread. They don't have any zero directional bias, neutral. And they watch S3 S4 and R3 R4 as their boundary. If the price goes there, they will put a aggressive sell, or if the price comes to S3 and S4, S3 S4, the aggressive bids will be kept there. So these are the things what they are doing. They create at one point of time when the price comes to the level S3 and S4, and they will start putting aggressive bids. Aggressive bids, and a liquidity wall appears on the bid side. That means it is a wall. Lot of bid will be put and the price stops falling over there. This is what creates the sharp bounce candle, not a directional bet, but mechanical liquidity provision. See, let me explain the Camarilla in a simple explanation. I also use dynamic Camarilla. Instead of you can replace it with the dynamic Camarilla or my rolling pivot, that is Nalini precision engine. What are S1, S2, S3 and S4, R3 and R4 are also dynamic. You can use that for the confluence. Not only Camarilla, you can use in my Nalini precision engine, traditional pivot has been used. That is dynamic. So in a Camarilla, how it works is, it is that you can go through it, you can take the screenshot. Actually, the close, from the close H1, H2, H3, H4 has been calculated, and from the close, the beneath supports have been calculated. That is 9%, 18%, 27%, and 55%. You please take the screenshot. You must understand while using these pivots. Blindly people use the pivots without the understanding of the calculation. You should not do that. Camarilla calculations are entirely different from the standard pivot calculation. here Camarilla pivot is mainly concentrate on the closing price of at any point of time, whether it is a daily or weekly or monthly or on the hourly chart. So that depending upon the close, these levels are calculated from the close. So these are the calculation for the regular static Camarilla levels. This is the close of yesterday. From the close of yesterday, 50% down and 50% up. High is at the 50% up and close is at the 50%. So these are you can Google it out. You will get the calculations. From now onwards, whatever you do, whatever you apply, start understanding about that. Unless you understand, you cannot trade better. Here, I am taking the example of this 24,200 put. What happened yesterday? Because not yesterday, that is on Thursday, what happened when the market peaked out to 24,250, this put option started coming down, coming down, coming down, and that was an exhaustion of the underlying at the top. Here 24,200 was becoming very cheap. Market makers started, they will be constantly placing the bid and ask, and they will be watching this level. This process will continue till the S3 and S4 comes. At that level, these market makers watch these levels and aggressive bids will be created at that level. It will create as a wall. It is a wall actually, it will be created. Then the price stops falling down. When the price stops falling down, and at the same time, these, institutional algos notice it as very cheap. They they start buying orders in bulk. They start buy orders in bulk. At that time, not only that, see, if you see that the S3 and S4 get confluenced, and even if you see that from my Nalini precision engine, the rolling pivot turns blue and the Gan Hilo, this is the zigzag one, which was magenta red, turns into blue. And aggressive buy orders will be placed, and it acts as a wall, and retailers notice this and participate in this. And many people are there who know this tactic. They start giving calls for this. There are call providers will also be there. Probably from the broker side only the people create, call operators. They will create call operators. How do they give calls? They will give calls immediately and they will make the clients to enter into the trade. They will give the calls, tips. You might be knowing. Some brokerage firms, they get calls from higher side. These are the brokers. For the small brokers, sub-brokers, these main brokers will provide calls for them. So these sub-brokers will give calls to the clients and they will ask them to buy this. So retailers start participating. Suppose if you are not linked to any of these things And you can trade with the confluence by seeing with the Nalini precision engine as well as the confluence of the pivot. You can trade, see the blast over here. The momentum blast here, it has taken place. Where the price has become cheap, and these market makers, when it became cheap at the S3 or S4 level, and they start placing aggressive bets, which is creating as a wall, and institutional algos notice it and take advantage it, and the convergence of all the three retailers. And so retailers cannot bring any move the market, but they participate in the momentum. If you here, if you participate in the momentum, you can see the low of the price of this put option was 82.75. It blasted to 160 or 165 on the previous day. Today, it came down. They made it cheap below the S3, S4. When it became cheap, there was lot of confusion they created, whipsaws. Finally, it took off and it moved up to 256. Same put option, you could have held for 2 days. One day from 82 rupees, it became 250. Even multiple lot buyers could have made profits. So there are call providers also, but you do not need all of them with my indicator Nalini precision engine. You can trade better. So institutional algos profit from being directionally right. So you need to be with the institutional algos. Execution algos types, they run, they watch actually rolling pivot, GAN, HILO, everything. So they wait for that, and when the trend established, aggressive buying will be there in the market. So we will compare head-to-head comparison between these market makers. From now onwards, you will get to know who are the market makers. Market makers are none other than our brokers, banks, and proprietary desks. What is their motivation? Just they will go on trading, bid and ask, bid and ask, bid and ask. They earn the spread. They don't have any view on the market, completely neutral. They usually, but they watch the zone S3 and S4, whether it is Camarilla or from my levels, rolling pivot, Nalini precision engine, S3 and S4. So what do they do? At that zone, they will put aggressive bid quoting and create what is the effect created there? Liquidity on the bid side. So then why the price bounces? Because statistical mean reversion will take place. And these institutional algos, I can say these market makers are facilitator for these institutional algos. So they are all mutual funds, foreign investors, hedge funds, quant firms, they come over there. So you might have seen so many times the time confluence also, not only the support S3, S4 and rolling pivot confluence, you can also see the time confluence. London time, you can see before London time opening around 11:30, manipulation will start. Either to the upside if they want to go down, either to the downside if they want to go up, and then these people will start coming into the market because of their participation, combined effect of these market makers and hedge funds, mutual funds, the large orders will be executed. Because of the large orders, these people, institutional algos, will create volume. Then you will see volume spike. Volume spike will be there. That will be a genuine. How many times you might have seen? Some stocks, even some stocks, they will be lying dead actually, but all of a sudden, single candle pops out because of the confluence of these market makers and promoters, everybody involved, the stock price. Sometimes you might have seen 17%, 18% pop up on the single day. So it is the convergence effect, friends. From now onwards, start seeing the convergence effect and also time. That's why I created Tesla time. Tesla time will also get to know energy flow, exhaustion at the 9 will also make you to understand what is happening. And when exhaustion happens at the S3 S4 levels, then and the rolling pivot turns blue and Gan Hilo aligns blue, then reversal will come into the market and aggressive movement will be there. So even you might have seen for the zero hero effect also, where if you see for the zero hero effect, actually it starts from the overbought condition and oversold condition. If you start tracking the RSI when it is in oversold condition and a reversal will take place, you will get a blast in them. Not only on the expiry day, every day, whoever it is, institutions wants discount. The market makers facilitate that. They keep on putting the bid and ask, and they create liquidity and make the retailers to participate. While participating in that, we ignore what is happening and where do they come into the play. When the big money comes only, then big move will happen. So from now onwards, start observing that. So simple way to remember the difference forever is shopkeeper is the market maker. It is always open. When starting from the opening our bell until the closing price, this shop will be open. Always has goods to buy and sell. Makes money on the margin between buy and sell price. Doesn't care if prices go up or down tomorrow, just needs footfall, set up stall at popular stops. And remember the institutional algos as bulk buyer with truckloads of money. Shows up when prices drop to a fair value level. This shopkeeper, this market maker is a facilitator for the buyer. So that's why you might have seen around 11, around 2 p.m., sharp moves will come into the market. If you go on backtest this, time will be there. Maybe slight difference in the time will be there. Every day they will change little bit time they will change, but they function when they start coming into the market. They are other time frame traders, mutual funds, big mutual funds and all, they come into along with that. They have a view, this is cheap, I want to own it. When it is cheap, we also need to buy, and we also be with these bulk buyers. When we are with the bulk buyers and when the institution shopkeeper is making a wall, aggressive bid wall, then it is a confluence and there will be a gamma blast in the market. That is zero hero effect. That's why people will trade. Even the 10 rupees, 4 rupees premium will blast to how many times you might have seen for 110 rupees or 20 rupees, 30 rupees. Many people, they trade for this. Many people, they trade for this, and I've seen some YouTube videos. Here one person is there, I don't remember exactly. He talks about the value buying. He keeps on repeating the value buying. Daily he makes video, and he suggests some premiums out of the money, call option and put option he suggests, and where he says where is the value. That is what he is telling, that is the value. That is what he means for it. So you have to read the convergence on your chart. When you start reading the convergence, when everything converges, then it will be very nice. Here you can see the convergence over here. The convergence, because of this convergence, this 82 rupees put option blasted to 180 rupees on yesterday, and today again from the cheap. Again from the cheap, 124 rupees. You should wait for that. Cheaper put options. And then it blasted to 254 to 260. That's how. And now this, if you see over here, it is the chart of the underlying. It started sell signals coming down, and it is a continuous. So it has come near the confluence buy area. Even if you apply the ORB Nalini Lorentz system, you can see the breakout level. Previous days ORB breakout level is at the confluence of this level. While closing in last 3 minutes, this was a big candle, but finally it blasted to 23,985 from 943, but finally closed around 943. The final adjustment was near the open. They closed near the open and they have shut the shop. So even last minute also there was a manipulation. And this is the indicator. I added certain things to my Nalini precision indicator, and I added volatility also into this, and also to RSI going, added RSI going to the over sold zone and overbought zone criteria added up, and then and volume spike also I've added into this. So automatically it doesn't show up on the chart, but table shows internally this has been coded for this. So I thought, let us see. Everybody talks about zero hero. To catch that, I've done that. When the market came down to 23,920, you can see the confluence of these pivots. Confluence of these pivots and the reversal, market reversed, and it is just sitting here, not a Gann Hilo. It is not crossed the Gann Hilo. Probably there may be a pop-up tomorrow. Since it is an expiry, they may make the premium. Opening bell, they may gap up. Or it may start if they want to make the premium, these premium, call option premium have become cheap. They will push the market to the higher position to make these call premiums to become more premium, costly. So cheaper premiums will become again gain the premiums, and then they will start selling it. So Retailers will not be allowed to participate in this because that will be the gap up. Only courageous people will take the position overnight, play for the BTST. So this is what 24,200 call option. It has come down to 14 rupees 35 paise, and it is an oversold. It has been plotted. Buy zone, it even went up to 12 rupees. Even if it goes to 5 rupees early in the morning, suppose if it starts reversing when it becomes cheap, these hedge funds can come and download their, dump their money to buy all these things. It may become cheap. There is no signal. It is saying that trend is down, volatility normal, and this one is momentum RSI is oversold. It is saying in the buy zone. But it is in the range. It is saying in the range. It is not out of the range. In the range means it is still within 10 rupees or 5 rupees. As long as it is in the range, you can trade. If it is early in the morning, when the market opens, you can consider and you can see for that. It is not a recommendation or anything. You can look for that. Just look for the option premiums and understand what is happening. What is the play between these market makers and institutional algos? So I have applied my long back. People had bought my indicator, Priya Kiran indicator. There I had coded for dynamic CPR as well as CPR, static CPR. You can notice over here how the price has reacted. That is the confluence. Confluence, this is the central pivot, CPR, central pivot. Black one is there is confluence between, they are aligning with each other. This CPR, they were not there actually, sorry. Since they aligned with each other, there was a move. So it may propel the move, and already tomorrow's CPR has been plotted at 24,117. We can anticipate for the gap up. If it goes slow, it will be very nice. If it gaps up, you need to see for the resistance over there. So you can grade your signals. Not all setups are equal. Grade before you trade. Why? You can position your size accordingly. If you are seeing an A plus setup, you can go with multiple lots. Yes, friends, you can go with 1,800 lots. Many people they trade. They make with the cheap premiums, they make lakhs also. But you need to be careful, not carried over by the simple without understanding the logic or anything, concept or anything. If you start observing the concept and understand the concept, and if you trade, then your hero zero will be successful. Otherwise, people will enter very late when the big candle is propelling. In the middle, they will enter, and all of a sudden, fraction of a second, all goes out trading, friends. It will snap back and you will lose money because you will be entering very late. So this is a process which happens. This is a process with the time it happens. You have to be with the process, observe the convergence, observe the confluence of the participation of the market makers and as well as the institutional algos, and my rolling pivot Nalini precision engine aligning with these participation, then that is a momentum blast. So it needs patience. So you need to be a sniper to enter into the market because you need to wait for that moment. not entering at the spike. You are not going to gain anything. So from now onwards, start observing all these things. Probably nobody has explained this because they don't want retailers to know this. They want only they will give calls. You are blindly taking the calls and you are doing it. Unless you understand that if you educate yourself for this, definitely you will get these momentous blast. Every day you will get momentum blast every day. When the price becomes cheap, need not become uh, cheap, very cheap, 5 rupees or 6 rupees. When the premium becomes cheap, when there is a confluence, when the convergence, then if you enter, definitely you are going to make money. So you have to manage the trade, entry, stop, and targets with the convergence setup. You have to manage this. Take the screenshot and keep it for yourself. So, friends, thank you very much for listening to me. And I've tried to explain as far as possible about the marketplace, how the market makers facilitate the trade for the big money, and how sub brokers and all they give calls, and how they make the retailers to participate in that. Why do they make? They want to offload their shares. They will be profitable. Thank you very much, friends. Nalini Swamy signing off.